I'm with Janice Robinson-Longmore, Vice President of Administration at First Global Financial Services. And today we're going to be talking about the stock market. But we're going to be talking about the ABCs of the stock market. Because our young investors stock market competition, for example, has so stimulated the market. Some non-traditional folks are coming out and they're asking questions such as, how do I invest in the stock market? How do I begin to invest? And to whom should I go for advice?
What we've been finding at First Global Financial Services also is that we're getting a lot of those types of questions. Over the years, a typical Jamaican investor has invested in repos. Now that repo returns are lower, you're usually looking now at about 6% if you're a retail investor for your Jamaican dollar repos, and you could even be getting less than 2% on a US dollar repo. And with the Jamaican dollar being more stable, people are looking for investment options that are going to provide more return. And you're right, the recent competitions and the results of them have really piqued our interest. How can we invest in the stock market? Now, in Jamaica, investment brokers that have dealt with your repos over the years can also help you with your stock market investments, because typically these brokers are also stock market brokers. So what you're going to do is to go to those same advisors who have advised you over the years about your repo investments and ask them. Usually, typically, investment banks have lists of recommended stocks. I know that we have this here at First Global, which changes over time, but they provide investors with a good guide of what is recommended in terms of first-time investments for stock market investments. There are now two stock markets in Jamaica. We have the junior stock market, which was recently introduced, and the traditional JSE index, which typically people had invested in over time. Your broker and your advisor can actually sit you down and walk you through what is available. There are 38 stocks now on the Jamaican Stock Exchange and 6 stocks on the Junior Stock Exchange. So the variety has really increased, because you'll recall, Owen, that at the beginning of this year, the junior stock market was practically non-existent. It started late last year. So now we're having more and more options as to what you can invest in the local stock market.
Would you emphasize the fact that investors should go to persons licensed to give investment advice and just not anybody? And of course, we're talking to the first-time investor now in the market.
It's extremely important for a first-time investor to go to somebody who is qualified, and not only qualified but is also very conversant in what is happening on the stock market. You, just like when you're sick, you need a good doctor. You need sometimes even a specialist. When you're going into the stock market for the first time, go to somebody who understands the stock market, not somebody who is unsure, doesn't know, can't advise you, can't tell you about the stocks. You need to know, for instance, if you're older, say for instance, and you need more income, you're going to be needing stocks that pay dividends. If you are maybe younger and you're looking for capital growth, you're going to need stocks that have good growth potential. You need a stockbroker who understands the difference and can walk you through the process, so that at the end of the day you're not surprised and you understand what you're getting into. Because one of the most important things that we need to understand, particularly since typically in Jamaica we've been used to fixed income investments that give you a sure return over time, we need to understand that there are no guarantees on the stock market, and you need to look at what you're buying more intently so that you know what to expect, because stock prices go up and go down and your return.
How do I select my stockbroker? How do I know I'm selecting the right person?
The Jamaica Stock Exchange over time has given awards, and if you go to the website you can see the various companies that have gotten awards over time for their performance in terms of advice, in terms of their websites, in terms of the information that they provide to clients over time. Take a look at the Jamaica Stock Exchange website and see which brokers in the market have been awarded these prizes over time. There are companies that have done very well. First Global, I know, has won prizes over the last 4 years. So look at companies that have won some awards. Also, you can look at companies that provide recommendations. Companies that typically investment brokers also have research units. Research units look at companies that issue stocks and look at the performance of the companies, and they're bold enough to make recommendations. If a company cannot make a recommendation to you, then that shows that the research might not be as robust as you would want it to be. So look at those brokers that can provide you with some advice and some confidence behind it.
Are there risks in investing in stocks? How risky is it?
The two things you need to be aware of is when you buy stocks, there is typically a commission. When you sell stocks, there's also typically a commission, usually about 3% of the money that you invest. So you need to be aware of this. So when you buy the stock, the money that goes into the investment is typically about 97% of what you hand over. The money that you get back would be 97% of the price that is paid for the stock. Now, how the stock market works is to invest, you buy stocks. To de-invest or to get your money out, what you do is you sell the stock. Typically what you would want is that the stock price appreciates prior to your selling so that you get a return. That is, you get more money at the end of your investment than you had at the beginning. We should note though that typically investing in equity is a long-term proposition. You can get short-term returns, but as a new investor, I would encourage you to have a long-term view for those investments.
Janice, getting into the market is one thing, but getting out is another. How do I do both?
I think maybe I wasn't clear when I talked a while ago about how you go about investing and de-investing. Alright, you have an investment advisor. You have money, maybe it's in a repo right now and you want higher performance. What you do, you go to your advisor and you say, I'd like to invest in stocks. You get your list of recommended stocks. You and your advisor go through, choose the ones that are most appropriate for you, you invest. When you want your money back now, what you do is go to that same advisor or representative of the same company and say, I would like now to sell my stocks. And they would look at your portfolio, they decide which stocks you're going to sell, and you get reimbursed that way. Now, to answer your question, what happens when the stock prices are lower than where you invested? That is why you need a long-term view, and it's also why you need diversification in your portfolio. So don't just dump all of your money into one stock because that stock is recommended or because you like that stock or company. Invest in a broad range, and also don't put all your money at once. Go in gradually so that you can do what is called dollar cost averaging, and you can have a diversified portfolio in a range of stocks. So typically some stocks are going to be down, some stocks are going to be up, but when you want to sell, you would choose those that you're getting your highest return on to sell so that you get return and also your portfolio is properly balanced when you do exit.
I don't understand stocks. Can my broker select those stocks for me?
If you're a new investor, what I would encourage you to do is look at the recommended list, but also do some research. Has the company performed over time? The companies that you're investing in, have they performed over time? Look at earnings per share, which is the income that is being made per share being offered. Look at net income, has it been increasing? Look at assets, look at sales. If it's a distribution company, has that been increasing? Look at strategy, how relevant that company is to the market. And we all know, we go to the supermarket, we buy goods, we know what is selling, what people like, what they don't like. I remember when I first started investing, I lived abroad, and somebody said to me, Janice, you drink Coke every day, right? And I was younger, yes, I drank Coke every day. So if you're supporting the company and buying this product every day, why not buy the stocks? If you see that a particular company brand product is becoming more and more interesting and they're increasing demand for the products, that's a product to buy. So even if you're not a sophisticated investor, you can have an idea of what you're investing in and the prospects for that same company, so that you're not just blindly going in, and you have more of a comfort level of what to expect. You're also going to see, when you look at the performance of the stock, what you're also going to see is whether or not there's fluctuation in the price typically, and what the fluctuations are. What are you comfortable with? You wouldn't want to, as a new investor, go into a stock that can fluctuate by 50% month after month, but you might be comfortable with a 5% fluctuation. So look at those things before you go in, so that you know what you're getting into. What that will do is, when the fluctuations do come, you'll be more comfortable because you had some knowledge of what you were going in before you went in.
Janice, what would be your final word for an investor or a potential investor in the market? Someone who has never ever invested in stocks, but it somehow has been glamorized for them. They see people making gains of up to 40% in a year, gains which no investment, no fixed income investment can give them in this post-debt exchange era.
Okay, my advice would be, typically speaking, there are stocks that you can make 40% on a year, but we don't hear about the stories when people lose 40%. So typically volatility goes both ways. Now, what I would say, as I said before, most of us who started investing in repos. Stocks typically ought not to be your first port of call for investments. So you've started investing and you know what you're doing over time. You don't just have savings accounts and checking accounts at banks, but you may have started investing in various instruments. Stock market investing would be your next step. Now, what I would also say is, when you're looking at it, you may have some investments built up over time. Don't just cash in all of those and go into the stock market. Go gradually, so that you can get a comfort level into what you're investing in, and you can know over time what to expect, so that you don't get any big surprises. Additionally, what I would say is, go in with a diversified portfolio. You can go into stocks with $20,000, $30,000, $40,000. You don't need $1 million to go in. So go in gradually, so that over time you benefit from, when the price drops, you buy lower, when the price is higher, so that you dollar cost average over time in terms of your investments, and you also experience the capital appreciation and the dividend payments that are available through stock market investing. So it's an exciting ride. It is a different form of investment. There is no guarantee. However, your potential gains are higher than investing in fixed income instruments.